I'm Bonnie Quinn.
And I'm Barton. This is Bloomberg Markets on Bloomberg Television. Time for Futures in Focus. Gold heading for a weekly loss. That's as the strong July jobs data adds to the case for the Federal Reserve to raise rates. Joining us now from the CME to discuss this and all, Tim Evans, Chief Strategist at Longleaf Trading Group. Tim, was last week's oil rally an aberration? Am I imagining it the biggest weekly rally in 2017?
Hey, nice to be with you today, Mark. I mean, I wouldn't call it an aberration. I mean, I definitely think the movement that we saw in crude oil was, well, you know, was justified by some of the developing market fundamentals. But, you know, I think option markets are really giving us a good cue in terms of what producer stances are with respect to these higher prices. And I think the selling into the elevated prices that we're seeing right now is something we're going to be seeing for the intermediate term future.
There's the OPEC meeting next week. Tim, I mean, do we get anything concrete out of that?
I mean, I do think so. I mean, I think the two kind of most important things on the calendar are today's rig count data from Baker Hughes and the OPEC meeting next week. I mean, most traders, the consensus amongst traders are that we're going to see, you know, some action taken by OPEC to effectively force the UAE and Iraq to lower their production levels and comply with the original deal.
Let's turn to gold, Tim. The jobs report, the read-through has been weaker gold prices. What's going to push gold up to 1,300 and above?
Well, I'll tell you, I mean, the gold market really has been driven by the dollar. I mean, as the dollar's fallen 9%, you know, that's obviously buoyed prices as we found that support from that 1,200 level, you know, to get above 1,275 where we were a couple of days ago. But, you know, there's a lot of geopolitical and domestic issues and situations that could obviously give gold a nice pop. But, you know, the market by and large so far has been discounting that, and it's been very currency dependent. You know, and with this jobs report, you know, the lift that we're seeing in the dollar, I think we could get a couple more days of this. So it could be, you know, some tough sledding ahead over the next couple of days for gold. But again, I mean, in the current environment we're in, Mark, we're only one news story away from seeing gold have a big lift, and that's potentially what's going to get us through that 1,300 resistance level.
Tim, has today's jobs report changed your view, timing of when the Fed will move again and how many hikes it's going to do in the next year or so?
I think it will change the market's view. I mean, I haven't been nearly as hawkish as the market with respect to what the Fed's going to do raising rates. You know, I didn't think the data, you know, ultimately is going to support and provide the Fed the option to continue to raise rates. So I'm not expecting to see another one, you know, this year. You know, that headline inflation number is really, I think, what's going to allow the Fed to move. And headline inflation is driven by core inflation, which is driven by wage inflation. And today's wage inflation data, I think, is helpful, but we're going to need to see a couple more months of that and some growth in that number, I think, to have the Fed in a position to raise rates again this year.
Tim, thanks a lot. Enjoy the weekend. Tim Evans, Chief Strategist at Longleaf Trading Group. With today's Futures in Focus, Bonnie.